Welcome to The Explainer. Today we're diving into a really critical piece of the U.S. tax puzzle, especially for non-residents, Form 8843. And look, this isn't just about boring paperwork. This is about protecting your financial standing. We're going to cover some of the non-obvious rules that you absolutely have to know. So let's jump right in with a question. If you're here on, say, a student or scholar visa, is it possible to accidentally get classified as a U.S. resident for tax purposes? The short answer is a very surprising yes. And honestly, it's a trap that catches so many people completely off guard. Understanding why this can happen is the secret to avoiding a massive tax headache. So why does this distinction even matter so much? Well, it's all about the fundamental way the IRS looks at your income. And trust me, this isn't some small detail. It completely changes your entire relationship with the U.S. tax system. Now check this out, because this is where the scope really hits you. If you're treated as a resident alien for tax purposes, the IRS can tax your income from literally every corner of the globe. Your income back home, investments, everything. But as a non-resident alien, their focus is generally just on the money you make from U.S. sources. The difference here can be thousands, maybe even tens of thousands of dollars. It's huge. Okay, so what's the trigger? What flips that switch? It's not about your personal intentions or even your visa type alone. The IRS uses a very specific, very mathematical formula. It's called the substantial presence test, and it's designed to objectively figure out if you've simply spent too much time here to still be considered a non-resident. And this slide just shows you how methodical the IRS is about this. It's a 3-year look-back formula, right? They count all your days this year, then they add a third of your days from last year, and then a sixth from the year before that. The key thing to get here is that every single day you're physically in the US counts, unless you can prove it shouldn't. Let's make this real. Look at this example from the IRS documentation. Say you were here for 120 days in each of the last 3 years. Well, you'd have 120 from this year, 40 from last year, and 20 from the year before that. That adds up to 180 days. Now the magic number, the threshold, is 183 days. If your total goes over that line, boom, you automatically meet the test and you're considered a U.S. resident for tax purposes. But, and this is a really big but, here's the crucial counter move. For a lot of you on specific visas, the tax code gives you a very powerful exception. It's called being an exempt individual, and this is your absolute key to navigating this whole test. Now the term exempt here is very, very specific. It's mainly aimed at students, teachers, trainees, and researchers who are on those common visa types, like the F, J, M, or Q visas. If you're in the US on one of those, chances are you fall into this special category. And here's the core idea you have to grasp. Being exempt doesn't mean you're exempt from paying taxes, not at all. It means you are exempt from counting your days of physical presence. This is the whole game. This is the mechanism that stops you from triggering that substantial presence test, even if you are literally in the US for the entire year. So, that brings us to the most important question of all. How do you actually tell the IRS that you're an exempt individual? Because you can't just assume they know. You have to formally, officially declare it. And listen to this. This is a quote straight from the IRS itself. It gets right to the point. Form 8843 is your official statement. It's you, on the record, explaining to the US government exactly why your days here shouldn't count towards that 183-day threshold. I really can't stress this enough. This special status is not automatic. If you fail to file this form, then in the eyes of the IRS, all your days count. You could easily blow past the substantial presence test without having a clue, all because you didn't file this one piece of paper. Okay, now this is where we get into the details that separate just a basic understanding from real expert knowledge. Let's go over the non-obvious rules about this form that are absolutely essential to get right. This is the single biggest mistake people make. hands down. Form 8843 is not an income tax return. It is a statement about your physical presence. So even if you earned $0 in the US, if you were here as an exempt individual, you should still file this form to protect your non-resident status. The form also has another important job, though it's a bit less common. Let's say you were planning to leave the country, but a medical problem physically prevented you from traveling. Well, you can use Form 8843 to exclude those days from the count as well. It's a really critical safeguard for those unforeseen circumstances. And finally, please remember this is not a one-and-done task. You have to file Form 8843 for every single tax year that you're in the United States and want to claim that exempt individual exception. Think of it as an annual check-in to maintain your non-resident tax status. So, the key takeaway is this. At the end of the day, navigating the U.S. tax system is your responsibility. This simple form is your single most powerful tool to make sure you're classified correctly and to avoid that very costly trap of being treated as a resident. It's a small piece of paperwork, but it has absolutely massive financial implications.